Welcome back to Markets Today. My name is Mbithe, and we normally have an Ask Mbithe segment where we actually invite you to ask us any questions on investments. This particular show is normally relegated to Friday, and we had asked a couple of you just to send in your questions. Thank you so much for your questions, your feedback, as well as your comments. Because of the numerous questions that we had, we've actually decided to allocate time each and every single day this week just to be able to answer your questions. So please feel free, pull out your phone, 20146, that's our SMS line. Ask us absolutely anything when it comes to investments. If that doesn't work for you, you could reach out to us. That's at Metropole TV on Twitter, Instagram, or Facebook. Or you could reach out to me. That's at Mbithe on Instagram, Facebook, or Twitter. Let's see what questions we had this week, and we will be answering this. Then we can go to the next part of today's show. Thank you so much for your question, which says, stocks have shown great volatility. Should I still put my money in the money markets? Thank you for that question. When it comes to your investments, what you want to consider is that you are literally building what we call an investment pyramid, meaning that you're starting with low risk, low return assets as you go up. Stocks, by their very nature, are high risk investments as well as a high return, meaning that you could make some good money or you could easily lose money. Now, the beauty about wealth and having a variety of investments is the fact that you have to ask yourself, where am I at in terms of my wealth generation possibilities as well as potential? If you are starting out, then what you want is to be able to accumulate capital and to preserve capital for a longer period of time. What that means is you possibly want to start off with the money market funds. If you invest 100,000, for example, make 10% return, take the 10,000 that you make after 1 year, which is 12 months, invest it in high risk assets such as stocks, meaning if your money doubles, that's okay. If you lose some money, then you are okay. But at least your pyramid in terms of your foundation for investments is still there. So to answer your questions, it is important to have your money market fund. I would say if you want to risk in assets such as stocks, be sure that you're comfortable in allocating that money, and if you lose it, you are okay. Let it not be your first point of investing because you want to be able to hoard capital and build on your capital base. Start with the low risk, low return investments such as the money market. The returns that you make there, you can move them to a higher risk asset class such as stocks. Let's see what our next question is. Okay, so say I have 1 million in my account from savings and I do not want to keep it in the bank. How do I go about investing the money? Thank you so much for that. I hope it's not a hypothetical. I hope it's a real question. If you have 1 million shillings today and you are keeping it in a bank, good for you. At least you've been able to accumulate it. But the reality is when it comes to money, smart money rather chases a return. You have a myriad of opportunities. If you are risk averse because you have been putting your money in the bank, then that implies that you want to be able to put your money in a safe space, but it needs to earn your return. If you invest directly that 1 million in the government of Kenya for 1 year, you would get an 8.2% return. If you invest the same 1 million in a money market fund, you could get anything between 8 to 10% depending on the money market manager, which is about 80,000 to 100,000. What I would say is leave a little money in terms of your emergency funds, something that you need in case anything goes wrong in your bank account, but then the rest of the money, move it into a money market fund and keep accumulating your savings there. Because if you do that, then you actually end up attracting compound interest in that your money balance keeps growing and it keeps earning day in, day out, month in, month out. So don't let your money lie idle. Always let it chase a return, but also evaluate the kind of return that you're looking for, especially if you want to preserve capital. Let's see what the next question is. What is the minimum amount one requires to buy East African Brewery Limited shares? Thank you so much for that question. The rule of thumb on the NSE, and that is the Nairobi Securities Exchange, is you buy a minimum ticket of 100 shares in any stock that you want to buy. When it comes to the case of East African Breweries, the current price is 155 shillings. Multiply that by 100 means that the minimum you need to invest is 15,500. Many people will say 15,500 shillings is a lot of money, but I counter this and I say, if you're normally out there and you imbibe or rather engage in alcoholic drinks, you possibly spend more than 15,000 in the last 12 months alone. Why not invest some of the money that you drink in a stock? It might be EABL, it could be another stock, with the possibility of it appreciating in value or earning a dividend. So that's the minimum amount that you need for 15,500. But still today on the NSE, there are opportunities that you can invest with as less as than that. Take Safaricom, for example. Same concept, 100 shares, you'd need a minimum of 3,300. If you wanted equity, you'd need a minimum of 3,400. If you wanted KCB, 3,700, and so on and so forth. Let's see what our next question is. Okay, it seems that our questions for today are up. But hear me out. 20146, that's our SMS line, or on Twitter, or on Instagram, or on LinkedIn, because we are here for your benefit. And we are getting to the tail end of the year. We would like to get into the conversation that helps you identify some opportunities that you can invest in, as opposed to spending all the money that you've been able to set aside by blowing it up in December. Maintain a balance, and we are here to be able to answer your questions. So remember, each and every single day this week, we will have an Ask Mbithe segment, and we hope you can be able to send us some questions that we can answer, or even your comment or feedback on what we can do better and what more you would like us to focus on. We take a break. When I come back, I will introduce our guest in studio as well as our very important topical discourse for today. See you after the break.